Hello everyone, Tom Kozlowski, and with me is Henry Becker here at Lighthouse Wealth Management. It's Sunday morning, and we wanted to give you an update on a number of areas, including some tax changes, what we see is happening in the economics and also in the markets, and what's happening here operationally. So just to let you know, first off, everyone here, knock on wood, is healthy. We're fully staffed. Anyone who doesn't feel comfortable, obviously they're able to work from home. We have set up VPN, remote access to our computers. If any of our staff members would prefer to work from home, again, everybody's healthy. They've all chosen to be here. And so if that changes, we'll let you know. But we'll make sure that we're able to be in contact with you if you certainly need us for anything. For those of you who we have appointments with, some we have face-to-face appointments with, ideally what we're going to try to do is reach out to set up a Zoom video conference. We've been using that for about the last year. It's worked out great. Certainly if some people need to come in to sign papers or anything else, we are here to meet with you face-to-face. But ideally, Zoom conferencing would be a better way to go if we can. Okay, so now to some of the tax changes or tax prep changes. So many of you have probably heard that the new filing date has been moved to July 15th from April 15th. If you feel that you have a refund coming, we certainly are recommending that you go ahead and file your taxes now so that the refunds will be deposited into your account as soon as possible. One thing to note is that Maryland has extended the deadline also to July 15th, but not all states have. We anticipate that they will, but as of today, they haven't yet. So as soon as we know something on that, again, all of this is a fluid situation, we will get back with you and let you know. Also, if you have already filed and you owe taxes, typically what's happening is it's set up with the IRS that money will be taken out of whatever accounts that you've set up when the e-filing was done out of a bank account. And we cannot change that. Lighthouse, our tax team, can't change that. We anticipate that the IRS will change that so that they won't pull it out until July 15th. But again, that's one of those things we are waiting on. And as soon as we know, we will let you know. For those of you who have estimated tax payments, so if you have estimated tax payments that would normally have to be sent in or withdrawn from your checking account, again, on April 15th, they've been extended to July 15th. There's another one, the second quarters are due June 15th. This is another situation where the IRS, it hasn't come out on its website yet, but we believe we'll push that to July 15th as well. So if you're sending payments in, you don't have to send them in to July 15th. We believe they will come out and clarify all this here over the next week or so. And again, we will keep you abreast as soon as we know on that.
So what we're dealing with, and we've talked about this in some of our recent communication, whether video or written, is a medical crisis has been the catalyst to what is now an economic crisis globally, not just in the United States. Unlike 2008, where we had a financial crisis that started in the financial world and bled through the entire global economy, we think this is a lot different in the sense that this could be short to medium term economic crisis because there should be an end to the virus in terms of whether it's a vaccine or it just runs its course across the world and people develop the antibodies for it. Where the financial crisis lasted for years, 3-4 years after the fact. Tom has even talked about it, where we were dealing with Greece in 2011, which was a mini financial crisis that looked like it could bleed into the European economy, which is a large economy and could have bled further. So the point being is containment of the virus is something we think will happen in the short to medium term, which means there's going to be some hope out there. But in the meantime, we're seeing a lot of economic calamity in certain sectors of the market. Everything's gone down: gold, bonds, stocks, real estate, values. well, not necessarily real estate values, but real estate investments like REITs. Everything's taken a hit in this point. And some industries are going to take it harder and probably take a little longer to recover. Airlines, hotels, travel-related things as people get more comfortable moving about. So for us, we look at it as the uncertainty is really what's driving the markets. Markets do not like uncertainty, whether it's government uncertainty or economic uncertainty. So we believe the uncertainty will pass with the passing of the virus as we get resolutions with the virus and so forth.
Now, over the next couple of days and next week or two, we're going to get a much better idea of what the stimulus plans will be, how they will help, thwart a lot of the economic issues that are coming because of the medical crisis here. And once again, we find out what those are, we'll communicate to you what they are, how they affect maybe individually each of us, and they're ranging from solutions for business, where they're going to be grants, loans. Individuals are going to be, looks like we'll be getting some payments down the road. They've talked about $1,200 to $1,500 payments for individuals over the next couple of months. And so that's all shaking out right now. But we should get a better idea of what's happening, hopefully by the end of this week. Now, for many of you, we've always recommended when we do financial plans for our clients to try to have 3 to 6 months worth of emergency monies set aside, ideally. And it is for times like this when things are uncertain. You've got something to hopefully tide you over. If any of you have lost your job or think you're going to lose your job, please give us a call. We want to know where you're at. So if we need to make any adjustments with what you've got, that you've got enough available so that you can tide yourself over until things get more clear and we start to recover.
So again, in terms of markets, we are with investment markets and portfolios. We think the way to go right now is staying the course. Trying to jump in and out of the markets emotionally is not going to serve anyone well in such a fluid situation. So we certainly think we're going to see worse headlines. We're going to see higher job loss. We're going to see higher death rates. We're going to see, just very simply, we're going to see superlative in headlines on almost everything. Mm-hmm. But what we're also seeing out of places like JP Morgan, Goldman Sachs, Morgan Stanley, we're seeing predictions from Goldman Sachs of negative 24% on US GDP for the second quarter. And from Morgan Stanley and JP Morgan both, we're seeing reports that they expect we're going to reach all-time highs in the stock market by the end of the year. So where are we going to be? Probably somewhere in the middle. I mean, that's just the way predictions tend to be, especially in something as unprecedented as what we're dealing with right now. I mean, the reality is nobody knows where this is heading, absolutely no one. And everything we're seeing more or less is prediction based. But we believe we will get back to normal, kids in school, businesses open, people traveling again, people staying in hotels. We'll get there. I mean, the reality is this will pass at some point. We don't know how long, but it will pass. So for us, investing, staying invested is very important. And the reason for that is we don't think we have complete faith that history as our guide shows us that the markets recover way before the economy will. And the reason that happens is hope. Once we start seeing glimmers of hope, right now everything is a negative headline for the most part. You don't see the glimmers of hope. Once you see that, that's a catalyst to the market. And right now, I'd say, and Tom probably agree, the investors, the market is starved for a good headline. And when they see them, even if it's a company headline, you see the market pop or that particular stock pop. So just a quick story. I was telling Tom, I watched the new movie Midway with my family the other night. So if you don't know the story of Midway, go look on Wikipedia. But so in World War II, the Battle of Midway took place, which was a few months after the bombing of Pearl Harbor. The bombing of Pearl Harbor, the stock market was already sliding. The bombing happened market fell into the tank. But then we had Doolittle's raid. So Doolittle flew a bunch of bombers over Tokyo and bombed Tokyo. That marked the bottom of the market, but it wasn't the bottom of it wasn't the end of the war. The market ripped back because there was hope. Oh wow, we're going to win this thing. We're going to take it to the Japanese. We're going to win the war. So the point being is we're going to see better headlines. The market will react way before the economy is back. And that doesn't, again, and not to be insensitive that people that lose jobs might be out of jobs for a long time. Those are terrible things. But from a market perspective, we fully believe the market will get back moving higher this year based on the fact that the market's going to move before the economy will.
So folks, we understand that the next several months is going to be or can be very unsettling and very emotional when it comes to what's happening with your investments, the economy, and so forth. So please don't hesitate to call us so that we can discuss with you your specific situation. Going forward, we're going to do some more of these videos. I imagine we may even do some this week if we get some more clarity on some of the stimulus plans and so forth. So again, don't hesitate to reach out to us. We're here for you. Please stay safe and healthy, and we'll be talking to you soon.